Hello and welcome to the Galeblade News. A new share index focused on China's technology giants has been launched by Hong Kong's stock market. The Hang Seng Tech Index went live on Monday and includes internet giants such as Tencent, Alibaba and JD.com. It will feature 30 of the largest tech firms listed in Hong Kong, which are among the world's biggest companies. The new index comes as Chinese tech firms face greater scrutiny in the US, with many looking at listings in both Hong Kong and China. Jack Ma, the billionaire founder of Alibaba, recently announced plans to list its affiliate financial arm, Ant Group, in Hong Kong. Alibaba, NetEase and JD.com are three tech giants that have recently listed in Hong Kong amid growing tensions between the US and China. They are included in the new Hang Seng Tech Index. The Ant Group is described as the world's most valuable unicorn, a startup that has grown to a value of more than $1 billion. Once publicly listed, it should also move into the index. Ant Group, a financial technology fintech firm, also wants to list on China's tech-centric STAR stock market as it shuns a US stock market listing. Analysts say the Hang Seng Tech Index will attract investors to other Hong Kong tech stocks and look beyond the more well-known Hang Seng Index, which is dominated by banks and insurers. The new index aims to rival and beat the Nasdaq in the US market for Chinese tech giants, said Bruce Pang, head of macro and strategy research for China Renaissance Securities. The Hang Seng Tech Index will track Hong Kong listed companies that have high businesses exposure to selected technology themes, including the internet, fintech, cloud, e-commerce and digital activities. So what does it mean for investors? Investment experts say it will be more convenient for investors who want to buy Chinese tech companies listed in Hong Kong now they have their own index. These tech giants were previously only available to invest in, either individually or by buying a fund that tracks the wider Hang Seng, which also includes banks, property firms and energy companies. But there is huge appetite for technology stocks like Alibaba and Tencent, which have generally performed well during the coronavirus pandemic as more people go online for shopping and entertainment. They can now be brought in an investment fund just tracking the 30 biggest tech stocks listed in Hong Kong. There is a great and positive new addition, marking the continued growth in China's technology space, and its mind and portfolio share of local and international investors alike, added Andy Maynard, Managing Director at China Renaissance Investment Bank. So what do you think of this? From my point of view, I think this is a good thing. By having its own separate stock market, it separates it into just technology. So if you want to invest purely in technology, you don't have to kind of look at competing against other brands. You're actually just seeing what's out in that existing market. Many of these firms are constantly gaining kind of their reputations and gaining income. So, especially in this time, this is one area where it's probably a little bit safer to invest in, as opposed to things that might come back or might not come back. Whatever you think, leave your comments down below. Like the video if you enjoyed it, and don't forget to subscribe.